Welcome back. Let's get a check on oil this morning. Crude prices headed lower once again after snapping at 12-day decline yesterday. This is the longest losing streak ever. This after President Trump called on OPEC and Saudi Arabia to lower oil costs while keeping production steady. Joining us right now, Price Futures Group Senior Energy Analyst Phil Flynn. Phil, good to see you this morning. Thank you so much for joining us. So this sell-off in the price of oil, 20% bear market territory. First, give us the 30,000 feet. What is going on with oil?
You know, I basically think President Donald Trump is basically dictating policy in OPEC. And I think that a lot of this drop has to do directly with him. He got the world's oil producers all geared up for these Iranian sanctions that never really happened on Iranian oil exports. He pulled the rug out from under them, and so they raised production. And so the market got caught. Everybody thought we would have a shortage. Now they think there could be an oversupply. And the other thing you can't discount a little bit is weak economic data coming out of Europe. You know, you've had weak data in Japan, weak data in Germany. So there's a concern that we're going to see a global slowdown for the demand for oil.
Right, because oil typically, indicates that, right? That it's an indicator for the global story. And you mentioned the president, Deirdre, he tweeted out this week hopefully Saudi Arabia and OPEC will not be cutting oil production. Oil prices should be much lower based on supply. What did you I know you covered oil for a long time.
Yeah, well, we were talking about these supply issues. And Phil, yesterday, of course, we were saying that traders seem to be moving on this idea of oversupply, right? Like we're producing record. We talked about 11.6 million barrels last week. Saudi Arabia is pumping, Russia is pumping. So all of that was keeping prices low. But is $56, is that sort of the new psychological barrier we should be looking at?
I think 55, is the floor that people are looking at for them to come at. And I do think there's a danger, Deidre, because you look at where we were a month ago, we were worried about undersupply. And then all of a sudden we flip a switch a month later, we're talking about oversupply. And so you got to be really, really careful here because of this volatility that oil producers don't make decisions that are too rash. We keep hearing, I'm very disturbed because I keep hearing people use the word oil glut. We don't have an oil glut. We had one in 2015. Supplies were 50 to 60% above normal. We had a huge build in crude supply overnight, according to the American Petroleum Institute, almost 9 million barrels. But that only puts U.S. supplies 2% above the 5-year average. Globally, supplies are barely above average. So if we're wrong on this economic slowdown and producers cut back too much, we could be undersupplied going into winter.
Phil, James Freeman here at the Wall Street Journal. Speaking of that undersupply possibility, we've read a lot in the last year about bottlenecks getting U.S. oil to refineries, pipelines in the Permian Basin, et cetera. Can you give us a status report on bottlenecks in the U.S. production chain?
We are starting to see some of them lift a little bit. We had a new pipeline come on just last week, really in anticipation to replace Iranian oil that they didn't have to do. We expect in the fourth quarter of this year, we're going to see that open up quite widely. But then I have to caution everybody, if this oil price continues to fall, there's going to be less incentive for these companies to get rid of these bottlenecks because they're having a very difficult time making money at these price levels. So we have to be careful. I know Donald Trump wants to tweet down the price of oil because it's good for the economy, and that's a great thing. But he has to remember, too, if he tweets it down too far, it's going to hurt the U.S. energy producer.
Yeah, so what are you expecting in terms of the price here? I mean, knowing that, the supply is there from the U.S., and this is not an overnight story. This is going to continue, showing that there is supply from the U.S. and there is supply elsewhere. I'm surprised that the Iran sanctions did not move the market the other way.
I agree with you, absolutely. Listen, the U.S. energy story, it's changed the world. U.S. shale producers. The problem is that I think that this drop in price could actually increase supplies quite dramatically. And the U.S. shale producers, while they've done a great job raising production to historic levels, they're not very good at raising it very quickly to meet a surge in demand. So if we get a big surge in demand, we're still going to have a very, very tight market going forward.
All right, we'll leave it there. Phil, it's good to see you. Thanks so much.
Thank you.
Phil Flynn joining us there.